Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is going to be the U.S. mid-session brief. Today, we're going to talk about the Canadian election, CB consumer confidence, and also some JOLTS job numbers that came out a bit earlier today. There's a lot going on in the world right now, globally. We're talking tariffs. We're talking trade wars. Major political event that went down in Canada yesterday and last night. I'm going to go over that. I'm also going to talk about the Canadian pairs. I'm going to start with the U.S. dollar, Canadian dollar. We had a trade ID, an official trade ID out there for that. And then also we had that, we've got a request coming in from our YouTube land on covering that CAD Yen. So I'm going to go ahead and look at that as well. All right, guys, there's a lot going on. If you have any questions at all, be sure to ask during the live stream. I'll do my best to address them all. If you have any markets you'd like me to look at, I'm more than happy to look at those. We've got a few trade ideas that we need to recap, but we've got to get out in front of what I would call a hyperactive news cycle just by looking at what's going on here. This is a good look at our dollar, our CAD dollar chart. But across the markets, you're seeing a little bit slower price action than we've seen, at least in the U.S. indices. I call this a breather. Markets are taking a bit of a breather. Right now, we've sort of reached a stalemate in trade war 2025, and that is absolutely probably the number one market driver that we're seeing across the board in any market anywhere. It's all about tariffs. It's about trade wars. And we haven't seen a headline lately. We had a little bit of a fallout, a little bit of a spat with Amazon earlier today. The White House did regards to over tariff pricing, listing tariff pricing. But right now, we're not seeing the type of price action that we've seen over the last 3 weeks. Now, I want to start off with this dollar CAD. We did have a trade idea there that I'm going to highlight. But first of all, think about the market drivers facing the Canadian dollar right now. You've got oil, WTI, oil and natural gas, 7 to 9% of Canada's economy. A huge amount of the exports go to the United States. So when we start talking about trade wars and tariffs, if in fact there's huge tariffs on crude oil or something like that, natural gas imports, you're going to see a major shift in the dollar, in the Canadian dollar. This is going to be a currency that we're probably going to want to be trading here coming up probably for the next several months, especially the CAD. A lot of times you don't see much action in the U.S. dollar, Canadian dollar. Look at this. This is years. Nothing happens. And then we get the big action. And the big action is what? It's because of trade wars. It's because of the new Trump administration and tensions between the two countries sort of going downhill. Now, what happened yesterday? Well, you had a win from the left, from the Liberal Party there in Canada. Mark Carney actually won the Canadian election. This is absolutely huge for a couple of different reasons. Number one, Carney, I don't believe, is even a Canadian. He served as the head of the BOE, the Bank of England, at one point, and now he was the ex-head of the Bank of Canada. So I always wonder, I say, okay, can a central banker be a prime minister? Can a central banker be a leader? Has this ever happened before? Well, you got something going here. I went over to Grok and I said, okay, well, we go right there. Has a central banker ever become a prime minister? Let's go ahead and see exactly what happens. I like running Grok searches. They're a lot of fun. I also use ChatGPT as well. Okay, yes. Central bankers have become prime ministers in several instances. What do you have there? It's a pretty short list. You're talking about Mark Carney, who served as the bank. He's the governor of the Bank of Canada and the Bank of England. Carney, a former Goldman and Sachs executive. Boy, I'll tell you what. This was a major blow, I would say, to the American populist win here in the United States with electing Trump. When you look at Carney, definitely is a globalist power, central banker, Goldman and Sachs executive. This trade war between the United States and Canada just went into another gear, just went into another level. So as a trader, I'm not really here to talk about politics, but we have to understand how this stuff impacts what we trade. Canadian dollar, absolutely huge. This is a huge idea for me. This is one of these things that I put out the other day that I have a tremendous amount of confidence in this idea. Trump news cycle spikes, US CAD bid in view, and we're basically looking to bid that 78% retracement somewhere from right down around 137.29. We're relatively close. Right now we're trading about 138.54. With NFP coming up this week, we could definitely get an opportunity to bid that level. So I want to start out with this trade idea. I think it's going to be a pretty darn good one. We're going to want to go ahead and be looking to go long right from that level and just get that bounce, looking for about 40 pips. Huge negative month here for the dollar CAD. We're down about 3.69%, and that's absolutely a big time move for any forex pair, but especially for the dollar CAD. So I want to see this market overreact. Remember, May 1st is Thursday. That's going to be the first day of May's trade. If we come down and sort of stall out right around 137.29-ish, I'm going to be on the long side of this market. I'm not going to be short. However, the short-term trends, the daily trends, the weekly trends, those are going to tell you to sell. I don't have any problem with that if you want to go that route. But for me, I'm going to hold out for that premium buy down there. And with a bit of luck, maybe we'll get it by NFP a little bit later this week. Bobby Bob, good to see you. Check on the Great Britain Pound USD. Will do. Absolutely. Let's go ahead and go to the CAD Yen. CAD Yen is a bit more of a different animal. And the reason why is because right now the Canadian dollar is showing strength. So is the Japanese yen. So when we're looking at making a trade on something like the CAD Yen, the first thing I would do is back out to the macro perspective, and I'd say, okay, what's really happening here? So the big move that occurred back in July of 2024, since then really just sort of went sideways. We've been trickling a little bit lower this year. In this instance, I love looking at long-term support levels, support and resistance, but key levels. Markets have memories. Always understand markets have memories. And if you find yourself having trouble breaking down the price action, this chart right here is ugly. It's ugly. I mean, I've heard that called like a barcode. I call it a picket fence. It's just whipsaw. We're to the down, we retrace, we're up, we're down, we're up, we're down, we're down, we're dojis. It's tough to trade that crap. It really is. So when I'm looking at making potentially a play on something like this that is absolute garbage can market structure, that's what I call it. It's horrible. Good luck picking a direction in that mess. You look for key levels. You look for long-term areas of potentially support or resistance, and right there, you've got one. So your low is going to be 101.66, and that's going to be August of 2024's lows. It's the yearly low, almost a 2-year low, very close to that. So if I was looking at something like that, I'd say, okay, that's going to be a big-time level right around 101.50, somewhere down in that zone, and you can see that we've really fallen down. 101.37 and bounced. Our low, this 101.26 and bounced. So the question is are we long or short? If you're trading it on short compressed time frames, you're probably going to want to be holding longs just because this area right down here is held up repeatedly as downside support. Now, if you're interested in getting aggressive with this, what you're going to want to do is you're going to want to wait for the break. And this sort of goes back to that trade the break video that I made, 2 weeks ago. Nobody really watched it. It's got only a couple hundred views, but if it's on our How to Trade YouTube channel, check it out. If we break, once that level's gone, no longer valid support, and we break, then we're just looking to join the fray. We want to join the sell. We just want to sell on retracement levels. So if that is, in fact, the case, let's go ahead and take a look at how we could trade beneath that zone. Let's take this right down to a daily chart. You see right down there, there's your double bottom. You're waiting for that 101 level really to give way, that 101.50 level to give way, and right now we're trading right at it. So if you wanted to trade right this minute, I would say you probably want to be long. I would be doing something like this. This gives us a pretty good look, maybe an entry right there, 102.27. Probably a pretty darn good bid if you're interested in maybe taking one of those later this week. As for right this second, you're in complete rotation. I wouldn't be long. I wouldn't be short. If I had to hold a position, I would be holding longs from here. But remember, Bank of Japan meets later this week, and that's going to shake this CAD loonie to its core. Absolutely to its core. So let me see. Great Britain Pound USD. Yeah, we'll absolutely get on that one right now. Let me see a B. Raj, US 30 looks good to buy. What do you think? Okay, then we'll tee up the US 30. And remember, if you want to make any of these trade ideas a reality, head on over to switchmarkets.com. Help you double your cash deposit with a 100% credit bonus. That boosts your purchasing power and makes you a very dangerous person, very dangerous poison. But you definitely want as much money as you can trade with. That's the name of the game, is liquidity. And Switch can help you boost your liquidity almost instantly with your approved account and deposit. That's all there is to it. Okay, let's take a look at this Great Britain Pound USD, and then we'll get into some of those other markets. Now, we've done an incredible amount of analysis over the year about the Great Britain Pound USD. Talked a lot about this zone right there. Well, what exactly was it? Well, let's back up 10,000 feet. What was the key level? Right there. Same exact principle we just talked about in the CAD Yen. Markets have memories. Markets have memories. Markets have memories. Don't ever forget it. What's your high there? Spike high was what? 134.34. What's this month's high? 134.42. 134.44. Excuse me. I look at a million numbers a day. 134.44 is this month's high. 134.34. Great counter trend scalp right there. Even though you've got a huge bullish month, about 3.75% here in the pound, Definitely bullish. I have no problem buying into this thing, just not from this level. The sell probably was the way to play it. There's a lot of retail retail sellers dug in. Sort of the old saying, dug in there like an Alabama tick. They're dug in there. And the reason why is they've got an out point. They understand that if this resistance zone holds, then the short's pretty darn good. The question is what do I do once it breaks? Well, let's get rid of our scribbles here and make some more scribbles. If, in fact, we break above this zone, this line right here, and rally, then it's easy. It's just like what we just said on the CAD Yen. We're going to wait for a swing high, and then we're going to buy in on retracement levels and get a good deal. What if I want to trade right now, though? You say, Shane, do you want to be long or short right now? If I'm position trading, I'm holding position shorts. That's going to be my stop out area. Your high right there is 134.34. Our high for this month's 134.44. My stop out point, if I was holding shorts right now, would be 134.59. And that's just because that's how I like to do business. Up above that half handle, I want to pad that a few pips, maybe 135.60, but I like nines. I like odd numbers for my stop outs. 135.59ish. Okay, that's great. If I'm holding shorts from here, I'm doing all right. Haven't made a fortune just yet. But what if I want to make a trade right now, a fresh trade? I want to be long. I want to buy. I want to see if I can get a discount because the trend is, it's up. The bottom line is the trend's up. We're fizzling a little bit here. We saw this area right in there, really a nice pullback there, but now we sort of had that bullish pennant. I know I'm moving fast, but there was sort of a P formation or a bullish pennant, and we've broken. So right this minute, I would be, if I'm not already holding shorts, I want to get into this market. I want to buy it. On the daily, it's not much help. Let's go down to a 4-hour chart. What's happening? Okay, we've got a trade. Spike low right there. Nice decisive spike low, swing low, double top right there. You can see we bounced perfectly off of that 38% level at 133.81, and now we've bounced up to about 134. That's a damn good trade. That was a damn good trade. Right this minute, what do I want to do? If you get a chance, you could probably take that bid again, and you really are just looking to cash in on the distance between this support zone and this resistance zone. So the idea would be to buy down here and maybe look for 25 pips or something. That's a decent trade. That's not a bad trade, and it's already worked once. Will it work again? Potentially. If the USD does make a rally, though, you could be patient and wait for a deeper retracement down there to the back end of the golden zone, and that's right around 133.42. So maybe 133.50s are worth waiting for. But I think either way, you could scalp to the long until you get up to that swing high, and then all bets are off. I mean, once we break, and if in fact this level breaks, and then we'll start talking about buying in up here and playing more for a macro move. So I hope that helps a little bit on the Great Britain pound. Let's see. All right, one more market, and then we're going to get on with the show. US 30. What do we think about the US 30? I don't look at the 4-hour chart on the US 30. That's a non-starter for me. As far as what we have here, of course, I've always got that on. All right. Lots of different ways to trade equities. Lots of different ways to trade equity indices, too, especially in the U.S. Let me see. The question from Raj is, US 30 looks good to buy. What do I think? I think that it's an incredibly difficult scenario right here to buy. And the reason why is because it's very, very choppy. Now, if you guys remember, one of our most popular videos that we've ever made is the orb strategy, the opening range breakout. Many of you are probably watching this live stream because you watched the orb. What would the orb be? 30-minute chart. I love the 30-minute chart trading U.S. indices right after the U.S. Open. So that gives you that first hour of trade. From 9:30 Eastern to 10:30 Eastern, you've got an hour of pricing data to base your decision on. And what do you have here? You've got a real tight compression and then a break. So if you're trading that orb, you're long. You're already long. Now, price is going against you. It's retraced against you. The real question is what do you want to do? Do you want to go long? Abhi Raj? I don't think it's a bad trade. The big thing you've got to do is you got to say, okay, what can I do right now to ensure that I don't lose the ranch? So let's go ahead and execute one. If I'm using my opening range breakout strategy, which is on our YouTube or our How to Trade Calm YouTube channel, go check it out. A lot of people really love it. It can be very, very good if you know the time frames and how to do it, and I outlined that in the video. 30-minute chart, that's what I like for an orb. It's just the ranges oftentimes are very large. So if I was going to make this trade, where would my stop loss be? Stop loss has to be beneath the range. I would be looking to do something like this. Is it a worthwhile trade? Well, it's about 160 points. So if you're going to take it right now, you've got to get at least 160. So you're going to have to print somewhere up in here to make this trade worthwhile. Is that possible? It's possible. Is it probable? Really, really hard, guys. This is a rotational day. It's not necessarily a breakout day. I would view this orb trade as being extremely high risk, but we like risk. We're not afraid of risk here. So let's go ahead and put it on. So that's your trade. So now if you're long, according to this orb strategy, you're looking for the market to rally because this initial breakout suggests that this zone right here is going to be robust support. And right now it's working. It really is. It's holding up. But my stop loss is down right beneath this level. You could either put it there. If you wanted to give it a little more room, you could do something like that. That wouldn't necessarily be bad. I would probably be right in here. Something like this. If, in fact, this doesn't work and we see the big sell-off come in, then we're going to get washed out and the market will close negative. However, there's a lot of bidders in here. Potentially, we could really nail it if, in fact, we're on the right side of this trade. Remember, a good trade has three parts. You've got good trade location on your entry, you've got a robust stop loss, and you've got an achievable, a realistic profit target. If you have those three things, you have a legitimate trade. And I would never eat your lunch for taking a trade that has those three things. Now, if you find yourself without a stop loss or a legitimate profit target or potentially a decent entry point, a good trade location, then you're in trouble. This trade really has those things. Trade location's pretty good according to our opening range breakout. It's not bad. Stop out point. Okay, I got a stop out point. It's concrete. I know where I have to get out. What about my profit target? That would be the only thing I would really question here. Are we going to get up from here? I don't know that. We're trading sideways. We're trading flat. It ain't great. However, if you make this trade worth your while, maybe looking to print 40,620s, that's about a 300-point rally. That's about a 1 to 2, something like that. It can make it work for you. For me personally, I'm going to go ahead and we can just bet that we're going to make some new highs, and we'll see what happened there. It's a challenge. Looks good to buy. As far as my macro looks, what would I be looking at here with the US 30? I would be looking for a deeper pullback. If I was very serious about taking a big-time trade and really putting a lot of glimmer in play, I would want to see a pullback, maybe a negative day today, and then looking to bid right down there above 40,000. This trade down here is very, very, very good. Whereas the trade that we just placed, it's making us look smart. It really is, because we're on the rally, we're on the march. But this is really tough trade location. It's good trade location, but it's a tough market dynamic. It's a flat market. People get chopped to death in this flat markets. However, we're doing quite well. So let's just go ahead and roll with it. Let me see. Flaming Delta. Woohoo. More crime in Canada, more taxes, more immigration. Can't wait to continue to see it. I hope we join the USA as a 51st state at this point. Well, I'll tell you what, Flaming Delta, at the risk of getting thrown off of YouTube forever, I live in Montana, which is a border state. We border Canada up here. And there has been a lot of talk about Alberta and the oil-producing regions, provinces right above Canada, potentially wanting to become part of the United States. This world's all about commodities. It always has been. It always will be. And that goes back to the Civil War. That goes back to Russia, Ukraine. He who has the commodities has a tremendous amount of control. And when you see the commodity base out of Canada, it is staggering. But there's a lot of it in Alberta. There's a lot of it in Saskatchewan. And I would say that you may see some folks in Canada definitely want to secede. I think you could see that. I think that this win politically, boy, Trudeau was not popular on Carney's Trudeau times two. He's the same policy. He's just in a different suit. And I have Canadian friends. I played baseball up in Canada. Canadians come down to Montana all the time. We sit with them in the pub. Great people, absolutely great people, but a lot of discontent with their government. So my heart goes out to you if you're on the wrong side of that election up there, because there's a lot that's happened in Canada that's not great, but there's a lot that's happened in the United States that's not great either. We all got to get on the same page and figure this thing out. So I hear you, Flaming Delta. That's tough. That was a tough election for a lot of folks. All right, we had another trade follow-up here. Gold. I definitely am going to cover the gold market. We're just going to talk a little bit about what we're going to do with some of our fundamentals today. I want to talk a little bit of fundies. Remember, Tuesday, Wednesday, Thursday, it's pedal to the metal. We're going to go hard. We're going to trade hard. We're going to get the job done. Dave, F19, good to see you, Dave. But you definitely want to be trading your plan. You want to be aggressive in building your account. Your mindset on Tuesdays, Wednesdays, Thursdays is you're aggressive. You're aggressive. You're going to make mistakes, but you're also going to make money. That's what we want to get accomplished when the markets are where we can attack them. That's what we want to do. We want to attack. We don't want to wait. We want to attack. Now is the time to attack. All right. Today, as far as our numbers go, consumer confidence and JOLTS. And, we're going to look at some headlines right here that are kind of funny, but they're not really funny because public perception of the U.S. economy is fading, and it's fading fast. It's no coincidence that we saw a bunch of negative poll numbers against Trump come out 100 days into the administration. It's no coincidence. The first 100 days are a huge benchmark for most presidents. They all get report cards. They all get polled. The polls have been not good. They've been pretty dismal if you believe polling data. Most of us don't. But what I'm saying is this. Consumer confidence is a number that we all look at, and you can see that it just isn't very good. 86 down from 87.7 expected, way down from 93.9. JOLTS job openings also down a bit. That's the number of jobs that are open at a given time, supposedly. A big, not necessarily, it's viewed as being a job creation metric, but not necessarily. It's just sort of an economic indicator. When you have a lot of job openings, you can interpret that as you being in an incredible growth cycle, or you could be like in COVID where there's a bunch of jobs and nobody wants to do them. It could be something like that as well. So JOLTS job openings, don't get too carried away with that one. The big one's consumer confidence. What we're going to talk about here is sort of a peripheral metric. And it's a metric that most people don't even know what it is. Atlanta Fed GDP now. The only reason I would talk about this is because it's extremely negative. Negative 2.7% is sort of what the Atlanta Fed believes GDP is going to happen. Moving into the future, we're going to see negative GDPs. That suggests an economic contraction. And you also see these other ones, Dallas Fed services revenues. I have no idea what that is. Texas services sector outlook, big time contraction. So we've got contractions, what I call academic people, think tanks, folks with 25 degrees on the wall. It's debatable how much they mean. But this was a really negative number and an ominous view of what's going to happen economically here in the United States from the Atlanta Fed. The Atlanta Fed, I believe the head of the Atlanta Fed is still Raphael Bostic, I believe. Not necessarily 100% on that, but I believe. GDP now is not an official forecast of the Atlanta Fed. Okay, well, they have their name on it. Rather, it is the best viewed as a running estimate of the real GDP growth based on available data for the current measured quarter. That's it. Forget the rest of it. It is the best. It is an estimate of real GDP growth. Now, it is not an official forecast. The Atlanta Fed's not going to put their name on it. Put your name on it. They're not even going to put their name on it. They're going to say, well, we don't really know what it is. We're going to put it out, though, and we're going to, okay, fine. They're saying the economy is going to contract. Now, you'll notice that right about the time we started talking tariffs and trade wars, these have been negative every single time. Every single report from the Atlanta GDP, they're saying recession's imminent. They say we're going to go into a recession for sure. Now, fortunately for us is the folks with all the degrees on the wall and the true experts, supposedly, of the financial world, they're not always right. Goldman and Sachs was predicting a major economic pullback over the next decade, and they predicted that back in October of 2024. Are they right? So far, they're right. Does anybody believe you're only going to get, 1 or 2%, 3% returns out of the S&P 500 over the next decade? No. You're going to get more than that. Inflation will guarantee that. So there's a lot going on there as far as these projections. It's highly political. And right now, everybody's pretty much lining up against the tariffs, and that's just the way it is. So when we talk about something like gold, which is highly sensitive to tariffs, geopolitics, any sort of uncertainty, it's important that we understand really what's going on in the gold market really at all times, in my view. So right here, I'm going to go ahead and I'm going to break all this down for you. I'm going to show you these levels, definitely levels to watch. We've been very good at that 38% level that we're going to outline here in a second. But let's go ahead and take a look at this chart. This is a chart, it's undeniable. There's an old saying in trading, be undeniable. Know what you know and get what you're going to get. Don't sell yourself out. Take care of your money. be disciplined, be a great trader, know what you know, and be undeniable. Take a look at this chart. This is a golden cross formation. This is a daily chart for the XAU USD. And you can see right there, there's the golden cross. What's a golden cross? It's when the 50 simple moving average crosses over the 200 moving average. That's what it is. Okay. That's an incredible uptrend. That goes back to November of 2023. You can see every pullback, pretty much every pullback to the 50 has been met with stiff bidding. This one right here, probably the stiffest. Right there. This is really a beautiful market dynamic down here, and it gives us a chance to build a Fibonacci sequence. It's fantastic in my view. We talked a lot about the big key area up there at 3,500. Is that the top of this market? Is 3,500 the top of gold? It's possible. It's possible. I don't believe it is. Most folks don't. We believe we're going probably up to 4,000 or so, but it really could be the top. And we talk over and over and over about when a market is trending, there is no resistance level up there. There are no technicals to hang your hat on. The only thing you have is big round numbers. And for gold, it doesn't get any bigger. It doesn't get any rounder than 3,500 an ounce. Right now, that's where all the sellers dug in. Excuse me. So is this, in fact, the top? We don't know. Are we still bullish or bearish? I'm still bullish. I've got to see a big-time retracement before I even consider the bearish side of this market. And I think a pretty good set of levels that you could trade for the week, more than likely going into NFP on Friday. It's going to be something like this. Now, we hit this trade again today, right around 3,300. That was an area that we outlined sort of ad nauseum over the past month or so. That's very, very, very robust support. Now, the thing about horizontal support and resistance levels, specifically Fibonacci's, is these levels are powerful. But once they give way, the market really goes. It really goes. So what I would be looking to do, really a premium trades down there at 31.75. We have a trade idea out that tells, really gives you the outline. Go ahead and check the analytics thread here in the trading room. But the one I'm really watching is the major discount buy down there, right around 3,100, 3,083. That's a fantastic level. And it's a pretty good zone there for a couple of reasons. Number one, that 50 moving average is coming up. It's coming into play. That 50 SMA has a chance of intersecting that 78% level. That means that if we get a big move to the downside, and we may, trade any sort of headline out of the tariffs, the trade wars, we could get that. We really could get that. Now, NFP's Friday, U.S. non-farm payrolls. I'll have it live for you, NFP Live. If, in fact, we get the type of number that suggests that maybe the economic growth isn't as dismal as we think, maybe this economy is going to be robust, potentially, then we could get a big-time move out of gold. If you'd have came to me a couple weeks ago and said, Shane, you're going to put a level out that's legitimately $200 away in the gold market and think it has a chance of coming into play, I'd call you crazy. It is possible. Look at some of these moves. Remember, what goes up must come down. It's just a question of how far it comes down. You're talking about 2.75% in a day. It only takes about a day or two to get down there. This is the level I'm watching. I'm watching that one closely. If we get a chance to buy that discount this week, that could be great. Great stuff. All right, let's get back to our US 30 trade. Not bad. A little 500, 480? Something like that, 500. Pretty good entry down there, really. Now we'll take a look at where we're at here in another few minutes. I'm interested to see where the next 30-minute bar breaks. Could be brewing. Could be a bullish breakout. Then again, you could just sort of wander around in the woods here. Hard to say. Definitely hard to say. All right, let's go one more. We had a question about Bitcoin. Bitcoin is one of those that everybody seems to want right now. 95,000. Excuse me. 95,000. Now, man, my voice is just in trouble. This is interesting stuff. Daily chart for Bitcoin. It's the opposite of what we just looked at for gold. Right there is your golden cross. You caught this tremendous rally all the way up to 100, 105. And then what happens? You come back down and you cross. That's what you call a death cross. 50 crosses under the 200-day. Look what happened to price, though. Back on the bull. So if I was looking at something like this, I'd say, okay, what's the best way to trade it? If you're just working with your dailies, I mean, you start talking about retracements. really any sort of retracement right now, you'd want to bid. So if I get a chance to bid 91 threes, 91 fives, probably a pretty good play to the top side. What you'd really like to see is another deep pullback, maybe down into this area, this golden zone area, potentially, and bid somewhere between 89 and 88. You got the 200 period moving average. Those are no joke. 200 period moving averages definitely are going to bring folks out of the woodwork to probably purchase in this case. So I would be watching Bitcoin closely. I'm still very bullish. I would call for, given the current administration's policy toward Bitcoin and crypto, meaning they want to deregulate, they want to take the regulations away. I mean, 105 from here, very doable. I think that the next real port of call where we're going to have a heck of a debate about what Bitcoin's worth will be a buck and a quarter, 125. And you can see that this double top right here, you got a double top right around 108, 109, that area right there. If in fact they break above that, which I think is very possible, you get a big break, then you're probably going to be heading north. I would much rather be bullish than bearish here. I think you want to be on the long side of crypto and Bitcoin, but we'll see. We'll just wait and see. All right, we did have a, excuse me, man, my throat and just out of here. Okay, let's go ahead and take a peek. One more peek at U.S. oil. Now, U.S. oil, sort of an interesting type of a chart. As far as the daily goes, you could definitely see exactly the first thing I'm going to do. Let's take a look at this. Nice big move, and we sort of failed. We had robust resistance up there at 65, 63. I was really hoping to get that sell. We just didn't get it. The high right there, 64.83. Not quite close enough. I want to see 65 and a quarter to 65.50 come into play before we get the sell. And then you can see we're coming off big right now in the last 2 days. So, excuse me. I think the voice is about done. This will be the last market. But right here, 61.59 is going to be 38%. So the question is, am I a buyer or a seller from 61.59? Probably going to be a seller. Let's go to a 30-minute chart and see if we can set up a late-day trade. Very interesting. 30-minute chart, sort of my bread and butter for WTI crude as well. Right there's opening bell. Typically for crude oil spikes about 9 a.m. Eastern. And then right there you've got a real tight type of an environment. And then you've sort of sold off. Then you retrace. We came off. So it's a negative day. You're off about 2.1%. But that happened. Most of that happened right back there during the overnight, or yesterday, and actually during the London session, right around here. I mean, that bar right there is a % loss. So something like this, I would definitely want to be a seller up here at 61.60. I just don't think you're going to get a $1.20 rally here in the last hour. But if you were to get it, then you could definitely do it. Would I want to be long or short right now, crude? We could build a 30-minute short. It's just you got to be real aggressive with your stop loss. Can't mess around. If you're a seller from 60.50, it's not a bad trade. It's not a bad trade at all. Just remember that a big flurry of activity is going to come into play here in about another 50 minutes. 2:30 Eastern, about the 10 minutes ahead of 2:30 Eastern, you'll see a huge spike in participation and volatility in the crude oil markets. It's been that way forever since the beginning of the pits, but that's really going to be right before the 2:30 p.m. traditional NYMEX pit close for crude. You'll see the market sort of go crazy before potentially retracing. We got to wait and see. This would be a very, very high-risk trade. I would much rather wait and be a seller maybe right up here at 61.50, and we may, in fact, get that during Wednesday's session. Yeah, universally, Shane, you feeling good? It's good to see. I feeling all right. Throat is still a little raw, though. It's definitely went round and round with a chest cold. First one I've had in years. I take a lot of supplements. Don't usually get sick, so I don't know what's going on. All right, everybody, let's take a look at our US 30 trade. And, that was a fantastic idea. Let's see. That one goes back to Abhiraj. US 30 looks good to buy. Amen. Go ahead and close that one out. That's sort of our opening range breakout. We bought in on a retracement. So that's a good-looking live trade right there. Let's take a look at how much we actually banked on that one. Let's go to account history. There you have it. Plus 803. Pretty good trade. Remember, these are demo dollars. These aren't real capital. I've traded real capital on these in the past, and I'm not sure it's something that we can do given the current regulatory environment anymore. All right, everybody, I'm going to go ahead and sign off here. I think that you're going to see a lot. Keep an eye on the dollar CAD. Like the Canadian dollar is going to be a big one, but you definitely want to be ready. As far as what to expect tomorrow, we'll be back with a 9 EMA with RSI confirmation workshop. We'll have an opportunity. I'll spell that strategy out for you and give you a good idea of how to trade it. I always get a kick out of that, and we'll do a little bit of demo trading, see if we can make a few bucks, and then we'll be back Friday with NFP Live. So be sure to tune back in this week. Always a pleasure to see everybody. One of these days I'll kick this cold. Let me see Universal. I haven't attended any of your lives for weeks. I got it now. Well, thanks for dropping in. Sure appreciate it. All right, everybody. My voice is absolute toast. If you have any questions, swing by howtotrade.com. Send me a private message, and I'll do my best to get back to you. Until next time, trade the action well, and we'll talk soon. See you.